So we can see AMD's data center and Intel's data center revenue and earnings, operating income over the past, let's say, 8 quarters or thereabouts. And the interesting thing here is that you can see that AMD was kind of stagnating a bit. And AMD's data center includes the EPYC lineup. So EPYC is basically your general purpose data center CPUs. And over the past couple of quarters, they also introduced the very much talked about MI300 AI accelerators, which is the AMD's answer to NVIDIA's H100. And those kind of accelerators are more for inferencing and AI large language model training. So it's completely different than, let's say, the EPYC lineup, which is just the general purpose CPUs, which also Intel has been offering over the past, decade with their Sapphire Rapids and now successor Emerald Rapids and as well Granite Rapids, which they recently announced. So interesting here, you can see that AMD was stagnating and now seems to picking up pace a bit. And Intel is just going downhill and it's just getting worse and worse. You can see that in Q4 of 21, they made almost 2 billion in operating income from their data center business. And to be honest, this Q4 of 21 is not their all-time best either. So this was good, but they used to be even more dominant, let's say in 2018 and 19. But now you can see that the last quarter, which they reported a couple of weeks ago, they came in at just 3 billion, still more than AMD. But now you see the distance is closing between the two. And the more interesting part is that AMD is actually making more operating income from their data center now than Intel makes on theirs, despite AMD's revenue being less. So they're basically making a higher margin. And this is not something that are news to us, and I think this trend will continue going forwards, because going back to this, if you remember this, you can see here that this is each company's yearly server lineup. So Intel was offering Sapphire Rapids and then Emerald Rapids in 2023. So the first one early in last year and the Emerald Rapids late last year. And so it's basically the same kind of architecture, slight modifications, some improvements, but still, going from 60 cores to 64 cores. Whereas AMD was definitely having the upper hand here with Genoa X, Bergamo and Siena. There were some workloads where Emerald Rapids would outperform some of the AMD's equivalent, but as a general rule of thumb, AMD was definitely having the lead in 2023. And going into this year, we see that they will keep talking about Sierra Forest, which is now their new strategy where they will have E-core server lineup, so many smaller cores, and also another lineup, which is now they called Granite Rapids. They will have, let's say, fewer larger cores, and it's basically optimizing for different workloads. But anyways, that's Intel, and this is AMD's lineup with the Zen 5, again, Turin dense, and then the 3D stacked version of it. And the interesting part here is again that reading from the people that are basically industry insiders, I get the feeling that AMD will still have the upper hand. Now, this is maybe the first time in a long time where Intel actually will offer some kind of competition in maybe even more than last year. But still, I think it's the safer bet to assume that AMD at this point will continue to hold the lead. And this will obviously affect the market share. And we know that the server market share for AMD has been going up over the past years, from being basically non-existent in 2016, 17, 18, and then as AMD introduced their Zen 1, Zen 2, and Zen 3, and Zen 4 lineup, they keep clawing back market share from Intel. So AMD still doesn't have, let's say, I think they're stuck between 25 to 30% now, but you could see them going close to 35, maybe 40, and in 25, if everything goes well, so late next year, maybe AMD can even go to 50%. But let's wait and see. So what kind of troubles does that introduce to Intel? Well, we know that Intel's data center used to be very weak, but now, as you see, they're not making any money, so they're basically giving away a lot of units, at no cost, at basically low average selling price. So they're giving it away just to stop AMD making a lot of money. And you can see if you combine the 3 billion of Intel and 2.3 from AMD, we're at 5.3. Whereas in Q4 21, so just around, let's say 2 years ago, just Intel was making 7.3 billion. So this says basically that the server market has basically gone down a bit, because back then AMD and Intel would totally do around 8 to 9 billion each quarter. Now they're at 5 billion. But I don't think it's necessarily the number of units of CPUs being sold going down, at least not the entire segment. I think it's more that the Intel is giving away their servers just to stop AMD taking market share. But for how long are they able to do that? I mean, how many more quarters of these can they survive? So yeah, that's a problem for Intel, but it's a really strong footing for AMD. And you add to that the MI300, which they just on the earnings report said that they managed to sell over 1 billion worth of MI300 AI accelerators this quarter, that was Q1 of 2024, and the previous quarter, so last one of last year. And the ramping ups, and the expectation from AMD themselves is to have somewhere around 4 billion of MI300s sold this year. Now, we know that as our usual rule of thumb, AMD used to be kind of a bit conservative with their guidance. So I personally wouldn't be surprised if they come in at 5, maybe 5.5, 6 billion by end of the year in MI300 sales or MI350X. So that's basically, and adding to this, at 2.5 billion of data center sales for just one quarter. Now you add to that, let's say, strong second half, because you know that also AMD is gonna introduce their general purpose server lineup, the Turing Zen 5 based CPUs. I think we could see maybe 3 or 3.5 billion for Q4, maybe even 4. But if you average it, so let's say 2.3 Q1, and then you say again 2.5 next quarter, and then you say 3 billion for Q3 and 4 billion for Q4. So that's 4 plus 3 is 7, plus 2.3 and plus 2.5. So that's 11. Almost 11.8. Let's say 12 billion in data center. So 12 billion in data center, and you could imagine at 4 billion sales in data center, the operating income could, in my opinion, be close to 1.5 billion. So I believe that AMD is gonna come in at between 10 to 12 billion in data center revenue this year, and they're gonna make anywhere between 3 to 5 billion in operating income based on that, somewhere thereabout. And that's only based on one business segment, which most likely will grow into 2025 by good amount, maybe 20, 30, 30%. Whereas Intel is not doing obviously that good at all, and sure, maybe they'll stop the reading with Sierra Forest and Granite Rapids, but yeah, that's not gonna take them back where they need to be in this kind of levels, at least not this year. Maybe next year, we'll see. So that's for data center. What about client? Now, the interesting part with client for both of these competitors is that Intel has the one last leg where they survived until now is the client, so the CPUs for the laptops and the APUs. They launched Meteor Lake last year, and early this year is in volumes, let's say. You can see here that Meteor Lake was on Intel 4, and it's I think it's a very good product. We see that Intel keeps selling them quite a bit, but in all honesty, it's a really good update for Intel, but that basically brings them back to where AMD was last year. So AMD this year has already introduced Hawk Point, which is essentially a refreshed Phoenix from last year. So that's where Meteor Lake stands. It's basically equivalent to AMD's last year and updated version Hawk Point. Now, Strix Point is gonna be launched anytime now in the second half of the year, and that's gonna definitely blow Meteor Lake out of the park in every single aspect. Because Meteor Lake, you remember that it was marketed for as an really like fast AI laptop engine for, let's say, consumers. Now, Hawkpoint is already faster than Meteor Lake, and StrixPoint is rumored to be anywhere between 2 to 4 times faster on AI, most likely 3 times. And actually, we know that Hawkpoint already is faster than Meteor Lake on the GPU side for the entire package, and StrixPoint is gonna be most likely, let's say, at a minimum 30-40% faster than Hawkpoint. So there's absolutely no way for me to see how Intel is gonna be able to compete with AMD on the mobile laptop side right now, especially going into the second half of this year, and let's say in the holiday season, for coming close to the Christmas, when a lot of computers are being sold. I think all the shelves will be stacked up with StrixPoint, and also at the lower prices Hawkpoint. So I can definitely see AMD knocking on the door of Intel's client computing, and this has been, also where Intel has been very strong of holding back AMD, because over the last 2 or 3 decades they've been the dominant force in APUs in laptops, and in CPUs in laptops, and lately APUs. So they've been kind of able to, sure, we don't have the same quality as AMD over the past 5 years, but what we can do is to promise you that we can deliver on the volume, whereas AMD weren't at the scale to, although they had better product, they didn't have the scale to satisfy, the Dells, the Lenovos, the HPs in terms of volumes. So that's where you can see that still Intel is making quite a bit of money, and the last quarter, Q1 of 2024, they actually had larger revenue on this single leg, so this single Intel client computing, than their entire other business. And that's obviously a problem for Intel. You can see that the total revenue came in at just below 12 billion. And as you can see here, that the client computing is more than half of it, and basically every single operating income part. I definitely see AMD gaining market share here in the client, and Lisa Su, AMD CEO, on their earnings mentioned over 150 new projects being worked on for this year in terms of new laptops coming on the market, and you actually start to see now quality AMD laptops on the market, whereas previously, they would have the nice AMD CPU, the brain of the computer, but the screen might have been much worse than the equivalent, let's say, Dell computer with Intel CPU. Or if the screen was good, maybe the keyboard was, plastic. Or if the keyboard was good, maybe the speakers were not good. So they found always one way to, make the AMD laptop inferior to Intel, not based on the CPU, but on all the other, like screen or build quality or whatever it is. So, but now recently you start to see even on the higher end quality projects, you see AMD laptops. So I believe this is also where you can see probably this is gonna go down for Intel. This is gonna go down for Intel. They're gonna feel pressure. Maybe the operating income will go down, but for AMD it's gonna be the opposite. I wouldn't be surprised if Q4 revenue is double than this, and if they make, let's say 500-600 million on this segment. And then we have the network and edge again for Intel. It's stuck here, stagnating here, and it's this not gonna make or break Intel. What they need to do is to improve here and here, and of course knowing that they also have the Intel Foundry business, which loses a lot of money, but that's like for the long-term survival of the company, because if they're not competing against AMD in the CPU side, and especially Nvidia on the GPU side, we know that Intel's Gaudi 3 is selling quite low compared to Nvidia, definitely, but also compared to AMD. Gaudi, their, let's say, AI accelerator, is rumored to sell somewhere around 500 million by end of this year. So that's like almost 10 times less than AMD's expected revenue of their AI GPUs. And Nvidia is at 40 to 60 billion, so it's much less. And for AMD, we also have the bad thing about AMD now recently has that the gaming GPU console side has been going down. So this is when you build your own personal computer for gaming, you have your RTX solution from NVIDIA, or you have your Radeon from AMD, and also you have the consoles, the PlayStation 5 and Xbox. And yeah, since we are mid-cycle for those, they released in late 2020 or early 2021, I don't remember, but yeah, so they're not doing that great on this segment. And the problem here, to be honest, is we know that when we looked at the 10Q of AMD for 2023, I don't have it here now, but when we looked at this equivalent for last year's full year, we know that AMD said that the largest customer in the AMD gaming GPU and console segment is one single consumer, and everyone knows that's Sony. And according to the 10Q, that's 18% of their entire revenue came from Sony. Now that's obviously low margin because the PlayStation 5 is not making a whole lot of money neither for Sony or AMD. But 18 billion of entire last year's revenue comes down to around 6.2 billion. So, 4.2 billion. So that's basically, we know that 4.2 billion of the entire gaming console segment for AMD was coming from Sony. And the entire segment was selling roughly $6.2 billion for 2023. So if you remove the Sony part of basically the PlayStation 5, that leaves you with 2 billion for the entire year of last year on this segment. And you remember that they're still selling, sure, not as much to Microsoft Xbox, but you would assume at least 1 billion of that remaining 2 billion is Xbox. So that leaves you with what? Another 1 billion for the entire years of GPUs, you know, the gaming GPUs that you buy on your Best Buy or Amazon. So if you're AMD, why would you invest a lot of R&D on the gaming GPU side, where you can invest that money on, you know, this segment, the APUs? The APU is basically a CPU and a smaller GPU, but that smaller GPU is usually enough for a lot of laptop buyers. You know, you can do some light gaming and that's enough. And recently, over the past 2-3 years, the APU is becoming actually good enough for a lot more than the beginner gamers. You know, maybe the guys that used to buy a bit more good, let's say a bit more powerful GPUs for their computers. Now they are satisfied with an APU. So what you do is then you just buy a laptop off the shelf, and it actually satisfies your kind of professional gaming. Not really professional, but you know, more than the beginners. And that's where AMD needs to put their money, because in this way they're gonna eat Intel's market share, and also NVIDIA, because you know traditionally NVIDIA has been very good on this part of the sales. So the GPUs, you know, NVIDIA RTX 4090, 4070. But if AMD attacks NVIDIA on the lower end, so the 4060 and the 4050 with APUs, that's where they're gonna make a lot of money, and we know that they're actually doing that. So we spoke about Strix Point, which is the successor to Hawk Point on the laptops, but the big thing here is the Strix Halo. So Strix Halo is basically increasing the core count yet again. If you remember that Hawk Point on AMD was this Hawk Point version right now has 8 cores. Strix Point is supposed to have 12. And Strix Halo is gonna have 16. So it's a much higher end product, and not only will it have 16, so basically double the amount of cores, it will also have 40 compute units of GPU. And this is basically now maybe as good as a NVIDIA 4060 or 3070 or somewhere thereabouts. So this is gonna satisfy a lot of volume of the market for gamers. So if you're basically buying at a 60 tire, or let's say 4060, even 4070, maybe you'll be satisfied with this product, and instead of buying, you know, a big box and put it in your room that consumes 300, 400, 500 watts and increase the temperature in the room. So that's why I think AMD is doing the right thing, and basically not going after the high end in this segment on the GPUs, because that's not gonna make them a lot of money. So the R&D money is better invested on the client side, so the mobile side, and the data center. Now, another bad thing for AMD recently is the FPGA business, but I think FPGAs, they've been going down for even Intel. So AMD and Intel are basically the two big ones, and so it's just a bad cycle. And you remember that although it looks like it's kind of imploding, the revenue of the FPGA. So this is the legacy Xilinx business. Again, all the other FPGA companies are not doing that well as well, and AMD guided basically for weak quarters over the past two ones. So Q3 last year and Q4 last year, they guided for weakness, and they also guided for weakness this quarter. But I think like come the ends of the year, maybe this gonna rebound. So summarizing, we know that most likely this will rebound in Q4. So let's say if we go back to somewhere here, like Q3 last year, so we make 600 million on operating income. Now assume that the gaming console will gonna be weak, so we assume just 100 million of operating income on this segment. So that's 600 from here, 100 from here, that's 700. Now assume that the client business is gonna make 500 million. Let's say 400 million. So now we're around 1 billion in operating income based on these three. And I believe that this one is gonna make, yeah, this is the big one. So I wouldn't be surprised if they make actually 1 to 1.5 billion in operating income. So adding all it together in Q4 this year, maybe 2.5 billion in operating income. And run rate on 4 quarters, that's 10 billion in operating income. And that's basically putting AMD in a much better position. So I think if you have operating income of 10 billion and then you have let's see AMD's you can see R&D. The R&D is around 1.5 billion each year. So that's gonna, if you take times 4, that's 6 billion in R&D cost. That's basically the big share of AMD's cost. So that leaves you with around 4 billion of basically net profit. Now, 4 billion of net profit for AMD, so how much is that? So we know that the company is at 240 billion. So a market cap of 240 billion, and you say you make 4 billion in profit, that's a PE ratio of 60. That's quite a bit. So AMD most likely is not cheap, but yeah, I think they are definitely, they have room to grow. Like look at this chart from Statista, you can see that they're basically still the underdog on the laptop side. And we've talked about how strong their lineup is for this year and next year. So I definitely see them, I definitely see AMD growing the client side. I said like maybe 2.5 billion, 3 billion by Q4. But what's there to say that if AMD continues to execute on this, why shouldn't they at least get close to 4 or 5 billion? If they have the better product, there's definitely demand for it. How do I know that? Well, look at Intel's. When Intel was used to dominate the market, they were like at 10 billion each quarter. So why wouldn't AMD? It's not totally unrealistic to see AMD do 4, 5, 6 billion in client at some close time in the future. So although the PE ratio might be quite a bit, and we know that they're definitely gonna grow in this segment. So if you double the operating income next year again in 2025, now the PE ratio is 30. It's still quite a bit, but not for a technology company that growing this fast. So I don't think, I think there's value for it. For Intel, it's much more difficult. But again, things could turn out quickly for Intel if they manage to stabilize the server lineup here, because this is where the bleeding has been quite severe. You can see that Intel's data center on the server side has basically, they basically lost it all and they're not making any money. So if they kind of rebound a bit and then add to it some AI accelerators with much higher margin, this could stabilize, and then you could see, this one maybe not doing as good, but it could be equaled or offset by doing better in data center. And then everything hangs for Intel on, as we mentioned previously. It all depends on their foundry, the Intel foundry, and will we see this revenue going up? And to be honest, I don't know. All we know is that Intel has the first access to the next generation ASML machines, which will do the extreme lithography process, which will be needed below 7 or 5 nanometer. actually ahead of Taiwan Semiconductor. But will that early access allow them to execute better, or is it just, maybe it's gonna stabilize the situation on the foundries business, but not to the degree that the company is gonna rebound. I don't know, but yeah. So that's gonna basically do it for today. There's not much more to talk about. I think it's just that all we know that AMD is definitely executing well on data center, and actually they're basically projected to do like 5 to 10% of the data center AI compared to Nvidia. So if Nvidia makes 40 to 60 billion, AMD is gonna make maybe 4 to 5 billion. So 10% on 10% on revenue. But you have to remember that 10% on revenue is basically the revenue market share. But the actual unit market share is higher for AMD because AMD's equivalent of Nvidia products are selling as at a lower price. What I've managed to dig up is basically maybe each Nvidia H100 is 30 to 40% more expensive than AMD. So if AMD has 10% revenue market share, they should have 15% volume or unit market share. And that's not too bad. I mean, when you read the internet, you might get a feeling of, that Nvidia has like 95% of the volume, but I think it's more close to 85%. And that still leaves AMD room to improve, and also for Intel. So yeah, that's basically about it for today. And yeah, thank you for watching, and see you in the next one.